Welcome to our discussion hosted by HRC in partnership with Martin Aitken Chartered Accountants, where we will be focusing on managing cash flow in a crisis. I'm delighted to be joined by Gavin Curr, who is Associate Director at Martin Aitken. Gavin joined the firm over 9 years ago after graduating from university and came in at trainee level. And since then, his contribution to both the firm and their clients has grown considerably. So not only is he Associate Director of Audit and Accounts, he's also heavily involved in the corporate finance team and the business advisory department. So, as you know, the impact of COVID-19 has required a shift towards a cash preservation mindset, where businesses are looking closely at their cash position, liquidity, credit lines, forecasting, and budgeting. And up until this point, most of the focus will have been on the top priorities, such as protecting employees, managing immediate risks to the business, and then also mitigating disruptions to supply and demand. So we're going to talk today about how businesses can best manage their cash flow in this current climate, and then look at the best steps forward that can be taken to prepare for optimising cash and business position as the wider ecosystem stabilises and we emerge from this downturn. So Gavin, thank you for joining us today.
No problem.
My first question would be, businesses are potentially looking at severe downside scenarios and they're uncertain about the best steps forward at this time. So what would be your recommendations for taking a deep look at their cash position now and then implementing disciplined cash flow management going forward?
Okay, the first thing they really need to think about before they can even consider a kind of deep look at what their financial situation is they need to have their current financial information up to date. That's going to play such a part on their kind of opening position or the starting position at any given point. And if that information isn't correct, it's really going to impact on any future decisions they make. So the kind of biggest point I would make there is just get the current financial information up to date. Once they've got that, that then lets them effectively plan for the next 6, 9, 12 months through what is likely going to be a turbulent period. I don't think many of us can see an end in sight at the moment for what's going on. But once they've got that information up to date, it lets them do a month-to-month analysis, looking at cash, profit, income levels, and then just review it regularly. It doesn't need to be an all singing, all dancing thing, but if they have a rough model that they're using or a rough kind of plan that they're following, it will stand them in good stead for the months ahead, which, as I say, for some industries will probably be quite difficult.
Okay, thanks. I mean, certainly this year hasn't been your typical year in terms of the accounting calendar. So what should be the most foremost priorities at this time for any business?
For any business, regardless of how they're getting impacted by what's going on at the moment and what's to come, the biggest thing has got to be their staff. They've got to make sure their staff are paid on time. They have a legal obligation, obviously, under employment law, but it's also a kind of goodwill element as well. As much as the directors of companies, the companies will generate money to pay the directors, they need the staff to generate that income. So it's imperative that staff are paid on time, in full, and there's no bad blood there, because morale will be affected if payments are missed or wages are late. So it's important that the reliance that they're placing on the staff is being properly remunerated in full each month or each week, depending on how the staff are paid. That's probably what I would say is one of the most important points, because especially in probably a manufacturing business or any sort of production business where there's stock being created or made or whatever and then sold on, those staff are essential to those businesses. The kind of second one I would say is knowing what is your safety net, what's your reserve position, what's your ideal reserve position. Obviously, you might not be at it, but if you know what that is, and looking ahead and thinking, right, what is our monthly overheads without actually doing anything? What are you committed to in rent? I mentioned wages there. What's your wages commitment? What's your rent commitment? And what other standard overheads do you have that you need to cover month to month? Now, ideally, in an ideal world, you would have a buffer and be able to work towards that. And I think you just need to have that in the back of your head, is to say, right, month to month, how much are we generating and what is that safety net? And probably the last thing, and this is not so much a cash flow point, it's more just an awareness. It's just an awareness of the ongoing compliance deadlines. Yes, when this all kicked off, it was great because HMRC issued a VAT deferral notice, which I think has been extended further. So while it was supposed to be paid by next March, I think they're now giving you another 12 months to pay it over after that. But there has been no further VAT deferrals. There's been no extensions to corporation tax, and there's been no extensions to self-assessment. So corporation tax deadlines and payments are still due 9 months after the company's year end. Self-assessment, there's still a deadline for the 31st of January 2021, and there's been no signs or indications that that's going to move. So I think certainly internally we've accepted that that's still the case, and we're working towards that.
Okay, that would be really good advice, certainly, for clients in terms of looking at their own timelines. So, as this is still very much a turbulent time, as you said, and supply and demand still unpredictable, what would be the key considerations and, say, maybe early warning signs that any business should stay alert for over the next 6 to 9 months?
Well, starting on the kind of key considerations that you just need to think about, I touched a bit on in the first question, just to do a month-to-month analysis. It's important that the businesses do have that. They need to know how much is coming in, how much is going out, how much is committed, and how much is then additional. They need to stay abreast of the current government guidelines. Now, I appreciate that it's an absolute minefield. It's a minefield for us as accountants because it is constantly changing. The furlough scheme has probably been the biggest one. Obviously, they've extended that into a different form under the new job support scheme. There will be a kind of job retention bonus, which I think is happening in January. So there's a lot of different things happening. So it's important that they're trying to keep on top of that, and there's no harm in asking for support, asking for advice, because I think every business is in that case where the guidance is difficult to follow, and in some cases it's affecting different sectors. And just, as I say, just kind of staying on top of that as much as they can. Looking ahead to kind of the warning signs and what you need to be staying alert for. Obviously, we're coming into what would traditionally be a busy season of the year for quite a lot of businesses, whether it's retail, hospitality, travel even. And it's the normal seasonality, I don't think, is going to be there this year. Certainly, experience I've had with a couple of clients who would normally see August, September being quieter months ahead of a busy Christmas period, have seen more of a smoothing of that, or hopefully a smoothing of it, because they've had their best September to date. Okay. But whether that's people just planning in advance, or whether it's their Christmas period will just be a lot less than normal, we don't yet know. But it's effectively not placing reliance on what could be quite a difficult Christmas period. So for businesses that would normally rely on that period, is not placing any reliance on that, or a reduced reliance on it, because it could be very different. And with the bringing in of the different tiers, both across England and the kind of extended version across Scotland, I think it could be very changeable week to week or month to month. Especially as we kind of get into January and February. Hospitality is going to be badly impacted, because even if they do open, it looks like there's going to be restrictions on when they can sell alcohol and when they can stay open, and so it's keeping a track of that, but also then keeping a track of what they can and can't do. And I suppose the last point is just adapting. Businesses need to be looking ahead and thinking, right, what are we doing? What are they planning? Have you got we talk about a disaster recovery scenario. Have you got a disaster plan? Like, what happens if restrictions prevent you from trading or whatever? So I suppose the biggest point there is adapting to what these warning signs are, because the big ones will obviously be cash flow and restrictions and stuff. But it's how is your business adapting to that?
Yeah, absolutely. No assumptions being made in any previous seasons or experience, and just remaining absolutely agile and adapting to what we're going to be hit with. Okay, so how should businesses best approach the decisions around cash management as they move forward, say from a crisis mode to a more steady state of operations, and then hopefully moving back towards that optimized working capital?
I think for most businesses, building on the point I made earlier, just about having a month-to-month analysis, I think it'd be sensible that businesses also have a sort of best and worst case scenario in their head. Try and be ahead of the game. As I said, it's important that you're staying on top of what you've got, staying on top of the monies that are due into you. Excuse me. Utilise all available credit terms. I think it's quite common that we see that actually businesses don't utilise the credit terms that they're being offered. So they've got 30 days to pay it, but some people are paying it in 15 or less. But what will become apparent is that working capital in the middle, that lag time till they get the money in, is where it's going to be impacted just now because of reduced sales or orders or whatever it may be. So it's just making sure that keep on top of the monies that are due into you. If you've given a customer 30 days, then be chasing them on that first day after the 30 days and make sure that the money's in. At the same time, have conversations with your suppliers, because if you've got a long-standing supplier, if it's a big company, they may be willing to accept some kind of payment terms which extend further than your standard and do some sort of payment plan. Other thing, just if it's a business that has stock, is make sure you've not got too much money tied up in stock. I appreciate that the Christmas period is coming up, and for some businesses they would obviously overorder. Probably be sensible not to overorder or to have things on short order of some kind, being able to order things in a shorter period and things like that. So just make sure there's not too much money tied up. And then the kind of last point is also, I mentioned about money's being due in. The key point is to make sure that invoices, if it's a business that you invoice out clients, make sure that those invoices are going out as soon as they should be. Now, some businesses will wait to the end of the month to invoice. If the work's done, get it invoiced, get it out. And the sooner the invoice is out, the sooner you get the money in. And probably just the last point is also just kind of around the compliance thing, is make sure that you're keeping on top of compliance payments, VAT, PAYE, corporation tax, that they still will fall due. HMRC are open to payment plans, so if you're having trouble, contact HMRC and see what they can do for you, because they've been very amenable to things like that at the moment. They appreciate where everyone is at, and definitely the payment plans are something that can be utilised to the benefit of businesses to ease the cash flow concerns.
Okay, brilliant. Some really, really good points there. What now might be your recommendations for a company to position themselves with that safety net, should there be the further disruption across supply and demand and the continued changing scope of things within this market environment?
Well, if it's a business that is lucky to be in a sort of cash positive position, I think you want to be maintaining a reserve account, keeping some money aside, both to cover a kind of sort of rainy day fund, both to cover like tax payments, but also as a bit of backup, a reserve that I talked about earlier, because you don't know what's going to happen. I mean, we're talking about we're in a second wave at the moment. There could be a third and a fourth wave. We just don't know, and it's the unknown which is creating the uncertainty. So if you've got any spare cash, make sure it's getting ring fenced and kept, if possible. But also the other thing to that is don't be signing up for things that are unnecessary. Don't be incurring unnecessary expenditure. Have a good review of what you've got, and if there's anything that you're not using or it's just not working for you, then you need to consider cutting that cost. If the money is much better, obviously, in your account than being passed to someone else for something that you're not using. And even things like utilities and stuff is have a look at what you're paying for the things that you do need, and can you get it cheaper? And it sounds very brutal, but you've got to look after the company or your own business interests if you're self-employed or a partnership, and make sure that you're running as cash efficiently as possible. The other kind of last point as well is just to consider. I mentioned the job support scheme and the furlough and everything that's constantly changing. There is a careful consideration there needed for this new job support scheme, because there's got to be a certain element of hours worked by the employee and a certain element covered by the employer. And depending on the hours involved, some of it is not worth it.
Okay.
We're kind of looking at a kind of smaller level. I mean, if you've got somebody that's part-time, you're not going to get an output if you're only getting them working 2/3 of what they should be working and things like that. So it's important that as the guidance constantly evolves on that, is that you're seriously considering that. How can it benefit us, and how can it benefit us? Just kind of moving forward between now and the kind of first quarter of next year.
Okay, that's a very good point. Thank you. What advice, would you give to any companies that have debt right now?
I think given where we're at now and how long this pandemic's went on, I think payment holidays are likely to have dried up with many suppliers, a lot of kind of hire purchase type suppliers, and obviously own personal mortgages. They offered 3 or 6 month holidays. If there is any opportunity to get any more payment holidays, then obviously grab it with both hands to kind of ease your cash flow. But another kind of consideration would be look at the debt levels that you do have. Is there any opportunity to kind of consolidate that on favourable rates? If you've got different lenders and different facilities across asset finance or just general kind of working capital facilities, is there an opportunity to consolidate that and just make it into a more manageable monthly payment? Generally, that will probably extend the term, but if you're quite happy with that, then obviously it might reduce your monthly payment. And probably the last point I would just say on that is actually just speak to the bank, speak to the lenders. Everybody is in this situation at the moment, so don't bury your head in the sand about it, and speak to them up front and just say, look, we might have an issue here. What can we do about it? And they will work with you to kind of see how you'll get around it. Yeah,
there is a huge amount of understanding out there and professional support. Certainly. Just on one of the sort of final points, what differences have you observed across the different sectors throughout this period? And can you maybe describe some of the support that you've given to your own clients in this time?
Yeah, well, the differences have been pretty vast across the sectors. There are obviously some sectors, as you can imagine, have done very well throughout all of this, depending on what they do, but there are obviously sectors that have really struggled, and I mentioned them already, the kind of hospitality and the tourism and retail and things like that. So the advice has been spread across, and don't get me wrong, the companies that have done well, we've still been supporting them through all of this. But can I give you an example of what we've been doing? I mean, it's ranged from simply having a weekly phone call or a 2-weekly or whatever call with the client, see where they're at, answer any immediate concerns they've got, offer any advice and support, whether it's a phone call or a video call. And that's not just been for accountancy, that's covered tax and payroll, and obviously then getting in further talking about bank facilities and what loans they've got and stuff. Leading on from the loans that I mentioned there, we've obviously been doing projections for kind of the business interruption loans. There's been a few projections required for things like there was various grant facilities that were available. There may be more, but I don't know at the moment for certain industries. But probably the most relevant one is just assistance with general cash flow management. We use different cash flow management tools depending on what the client does in terms of the bookkeeping and things that they can link into, and something that we can do or they can do themselves, or a bit of both. And it's helping them kind of project forward. And one of the tools in particular, it does like scenario basis, so they can look forward and say, look, on our current levels, if we lose a member of staff or we lose 10% of sales, how's that going to impact the future cash balance? And it lets them look ahead and see, like, what is the the worst point, or what can we get it to, and things like that. And it lets them play about with a couple of different scenarios. But the most important thing is it lets them look forward and consider their cash flow as accurately as they can.
Okay, brilliant. I know from working alongside you, Gavin, that undoubtedly your clients will be more than grateful for your support at this time. And I know that a lot of the advice you've given today will be of huge benefit to people right now who are trying to consider those next steps. So thank you so much for your time and all your contributions.
Oh, you're welcome. You're welcome.
If there's anyone who would like any more information or support on this, then please feel free to contact Gavin at Martin Aitken Chartered Accountants through the usual channel on their website or in fact on social. And likewise, if there's anything else that you feel that ourselves, HRC Recruitment, can support on, then please feel free to reach out similarly on the same channels. Again, Gavin, thank you for your time, and I look forward to our next discussion. Thank you.
No worries. Thanks.